Welcome back to another market review, another trading week, and I hope you're all seeing some success and picking up some tips and tricks from this YouTube channel so far. As always, we're going to start by looking at the economic calendar for the week ahead, and unlike last week, this is set to be quite a volatile week based off what we're seeing on this calendar. So we've already started off this week with the core retail sales and retail sales from United States. And the news just picks up from there on in. Tomorrow is going to be a very, very big day for the Great British Pound. Not only do we have the GDP and manufacturing production, but we're also seeing a vote in the Parliament about what the next steps for Brexit will be. Now, my advice will be not to really look to trade the pound this week. I personally think it's just going to be very, very volatile. What I have found some success with over Brexit is during these parliamentary votes, the days or 2 days before, the price is actually moving in the opposite direction to what it plans to do come up upon the news release. So it'll be interesting to see how the pound reacts today and tomorrow morning as to whether it's going to give us any clues as to whether we can take some speculative positions based on the potential outcome of the vote. And then we finish up the week with interest rate decisions from Japan, which again likely to disrupt the markets. We did see quite a lot of yen strength last week, which could be an indication of how this is going to turn out. So on weeks like this, different scenarios of your trade's outcomes are going to come into play. There may be a lot more manipulation, so the price may spike a stop loss before continuing running, or also you can use a manipulation to find those really good sniper entries, which is something that we do cover in the mentorship. So let's get down into some charts. I'm going to start off on the pound pairs actually, because it's showing some nice technical analysis that played out last week and has started to do so again this week. So what I'm going to do on GBP AUD first off is start on the weekly time frame. Now, on the weekly time frame, you can see that the price has formed a new high here technically, which tells us that the next phase of this market is likely to be a retracement. So ideally, that retracement would be of this leg here, but because this is on the weekly, I doubt we will see that. So what I usually do is after we've highlighted what's just happened in the market, i.e. a new high has been created, I'll draw a trend line as best as possible, which is what we got here. And then we can say that, okay, so the price is likely to come down and target this counter trend line. Now, can we layer it up with any further technical analysis? Yes, we can. We can draw in a Fibonacci tool there. And we can see how the 1.8250 key level matches up very nicely with this fib move and this confluence level. So we can draw in a little box here and we can monitor this for potential downside on pound Aussie. Continue to scroll further and we can see that the price has rolled over Thursday, Friday last week, ever since we spiked this key level. Again, great accuracy there on these key levels. The price has fallen to the downside and it's just beginning to pull back as people look for potential short entries. Now, there's a couple of scenarios here that could play out. As I said, with the news tomorrow, I'm not overly eager to jump into positions. But what we could see is shorts coming in from right now, or we could see the price push a little bit higher, test this pink intraday level, as we've seen multiple rejections from that in the past, and then drop. Obviously, for me, this is my preferred setup because it would mean we have a minimum risk compared to a massive reward down to 1.8250. And also my concerns about this setup is this trend line that we've drawn in is we call it an inner trend line. So it's not as reliable as these outer trend lines. But as you can see, we have broken and we are looking to retest this inner trend line as well as the 50 EMA. So if we were to see a spike up here for the rest of the day and then a rejection, then that could lead us to be triggered into shorts. But right now I'm just going to be patient with the pound pairs, especially pound Aussie. We know where the price is likely to go. I do favour for more downside, and I think 1.82500 is a nice downside target. But what we now need to wait for is for the price to move into an area that presents us with the best possible risk to reward. And that's what we're going to do. So either even if it springs up another 30 odd pips, that could lead us into a short, or if we do return up to the 1.8700 level, that would be a great time to short. Similar with GBP, JPY as well. What we can see on the weekly is that we have actually been following this pair for a while, and we did call, ever since we saw the flash crash at the beginning of this year, we did call for the price to be returning up to the 147.50 levels, in alignment with this counter trend line here. Now, we did, week before last, we did have a very strong bullish close. That did made me doubt my analysis a little bit, and maybe sort of led me to believe that the price would just fly higher from here. But what actually last week showed is that was a fake out, and the price completely wiped off the previous week's gains. So for me, I do believe pound JPY again is going to be coming lower. And what we can do is we can drop down into these lower time frames to find potential trade setups. Now it's quite obvious we can draw on this counter trend line here, and we are actually in for a third touch. But because how we trade here, trade Hunt FX, and we like to go on the higher time frames first to pick our bias before dropping down to the lower time frames. Now the weekly on pound JPY is quite bearish. You know, we're still forming these structures, these swing points, lows into lower high, into lower low, with last week forming a very bearish reversal candle there. So these are the low into lower high, into the lower low. So for me, I'm inclined to believe that this trend line we're resting on right now is likely to break. That doesn't mean we should look to sell right now, because what can happen is the price could still pull up a little bit here into this fib zone around here before we do drop. So again, if that was to happen, I would be interested in taking a short position there. But the ideal setup for me is to wait for the break, the retest, before we enter short on the continuation phase, with 142.50 being the first downside target. But as you can see, there is a couple of setups here. Again, if you did enter around here, your stops would be, it's going to present a fantastic risk reward if we did enter there. You know, you have a 50 odd pip stop with your first take profit being down at 14500, and then you would just try and hold as much of that open as possible, and that could be a very nice 6.77 to 1 risk to reward. How I advise people to sort of phase their way into positions is, you know, take sort of maybe 20%, 30% of your normal lot size up here, and then you just add more as the price moves lower and as the price continues to break support levels and trend lines. So that's something to watch out for pound JPY. You know, again, if we were to get that spike up today or tomorrow morning with the vote in our minds, that could be a very nice speculative entry, yes, but could again yield very nice profits. And sometimes in these markets, you just have to take that risk, and then, you know, reap the rewards if you stay consistent enough. Euro JPY, again similar to Euro JPY in that we did have this huge bearish week last week. I originally did want this pair to pull up a little bit deeper into the 130 odd level, because I saw that we had, you know, we'll again form these very nice swings into lows, lower highs, lower low, and we were just waiting for a new lower high to form, and I was expecting that to form up around there. But what last week's candle has told me that is, you know, the bears may be back in control, and the price could look to continue lower from here, with 124 the next downside target, and upon a break of that, you know, we could very much see 122 in the not so distant future. What I've drawn on here is, we'll go over that in a sec, but you know, right now the price is kind of like trading in no man's land. We're just in the middle of two key levels, and as I said, we do want to be selling this pair, whether that be on a break of 124 or whether that be on a pullback up to 126. It completely depends on how the market wants to present to us with a trading opportunity. But again, when we drop down to lower time frames, you see we're on a 4-hour chart now. This is where you can start layering up your technical analysis, throwing in the trend lines, throwing in the Fibonacci's, and really trying to find those good confluence levels on your charts that, you know, trades can be taken off. And this is one that's developed here nicely. You know, not only do we have a third touch of the counter trend line, but we also have a moving average retest, we also have a key level retest, and we have a Fibonacci move. So again, no, a spike up into this region here could again trigger us into shorts, and it produces a very nice 4.73. Yes, I do think we're going to come lower, but there's reasons why I'm not going to enter shorts right now, and that is because we want to wait for the best possible risk to reward. The better your risk to reward ratio is on your trades, the least amount of trades you need to win, and that takes off all the pressure of trading. Now, a lot of people come into the mentorship saying, you know, my technical analysis is good, which I'm sure it is. I just struggle with my entries. But if you see the markets for what they are, and then you'll realize that entries aren't actually too important. What is important is highlighting where you think the price is going to go based off your higher time frame analysis, and then just positioning yourself in the market where your risk isn't too much, and there's always plenty of reward to compensate any risk that you then put on the table. So that's maybe a different way to start looking at the markets. And we can take it from there. What else do we see? Euro USD as well. This, for me, this is going to fall, continue to fall. What we can see on the day, so the weekly time frame is where the importance is. This candle last week has done something that the price hasn't been able to do ever since we broke back above 1.1300, which is since the 26th of June 2017. So a year and a half plus maybe 20 months, 22 months has gone since the price has managed to close back below 1.1300. We saw multiple retests and failures, which is again gives me that reason to tell us, okay, the next price to the downside will be our next key level, which is 1.09750. We can go down into a lower time frame, and we can now draw up the potential scenarios for this pair. We can look left. The simplest thing to do in trading, and if you're lost in the markets, is just simply draw some structures based on just simply looking left of where the current price is. So we can see the prices here. We can look left, see that the price has rejected from this level before. We've broken through it now, so this support is technically now resistance around here, and the price could very much just melt from here down to those lower levels. Alternatively, what we can do is we can just replicate what we've seen in the past. So before, we've had a fib from A into B. We had the rejections here and then the drop. So what we can simply do is maybe see and try and expect another similar move. So again, if the price was to poke its head just a little bit higher, I would be very interested in selling from this region here, trading it back down to the D1 extension at about 1.1100. Again, enter on the 71% fib. Stop loss goes 30 pips above 78.6. Then our take profit will be all the way down at D1. And again, that yields a very nice risk to reward. So I think through this video, you will have realized how waiting just that little bit longer in the market does really help you boost your risk to reward. Which is always a good positive. So those are a couple charts that are on my watch list right now. Hopefully Euro JPY does ping up. I do like the Euro pairs down to continue its downside after last week's news from the Eurozone. If you missed it, they basically came out and said that they're not interested in raising interest rates for the rest of this year. And you know, interest rates are a great source and view of how strong an economy is. If they continue to raise interest rates, that technically means that the economy is doing well. But if they're lowering or if they're not moving interest rates at all, that's a warning sign for that economy. So I do expect a weak 2019 for the euro, well, at least for the next 6 months or so. It needs to drop down into these lower regions before we can potentially look for that any sort of mid-year turnaround. Also, let's cover gold quickly before we go. So gold for us is looking like it's going to be heading lower. We have had this, well, a pretty spectacular bullish run ever since the end of 2018. It should be continually flowing to the upside. But what we can see is we have had this sort of release of pressure over the last couple of weeks, and the price has now broken back below a key psychological level of 1300, and we are now rejecting that right now. Friday's candle was quite bullish, so I'm sitting in my hands right now with this pair. And again, we're picking up potential scenarios of where the best place to enter sells are from. So again, there's two scenarios. The price may want to pull up, form a right shoulder, and of this head and shoulder pattern there. Or what the price could do, or what we could wait for the price to do, is to break below this pink horizontal line at around 127,750, and then we can look to enter on a pullback for trading it down to 1250. So those are those scenarios from here. It is showing signs that we are rejecting off 1300 here, but again, as I said, we're kind of in no man's land again, and I would like the price to show itself first before we make that decision, whether it be selling from up here or selling on a break of this pink horizontal line. So those are setups for this week. I hope you guys are enjoying this video. In the bio, I'm going to put a list of all the services TradeHunt FX now offer. There's a mixture of paid services and a mixture of free services as well. They're all designed to sort of hit every particular niche in the market, whether that be you're looking for education, whether you're looking for some free day-to-day updates on the market, or whether you're looking for a trade copier where you can start making your money work for yourself. We're going to be providing it all here at TradeHunt FX.